Good afternoon, everybody. Welcome back to my channel. It is me, the Millennial Investor, 1914. Holla at your boy. I'm excited. Yes, I'm excited. I'm excited. So I'm going to tell you guys the good news, the positive news, but then also the negative news. So the positive news is that, the negative news is that the market has been down, free falling. I was at roughly $75,000 portfolio. Now I'm down to $66,700. That's the bad news. Good news, I just put $2,500 into the market. It's like throwing money into a furnace, because the money that I threw into the market, I thought was going to help, and then the market continued to went down. That's good and bad. But the best part of the news is that if you can buy the stocks that you want, everything's on sale. Everything's on sale. When you look at my stock portfolio, everything is on sale. Broadcom is down, Microsoft is down, SCHG, Kroger, SCHD. I have American Express. I have Aflac, VGT, Tech Place, TSM, Taiwan Semiconductor, Tech Play, Meta, Tech Play, Tesla, Tech Play, Nvidia. Everything is down. Even good almighty Visa. Visa is down. So what do? Do you run? Are you scared? Are you scared of the market? Are you scared to feel like you're going to lose money? No. Zoom out 5 years, zoom out 10, 15 years. People make money. At times like this, when a stock market is down, a correction is when the market goes down 10%. A bear market is when the market goes down 20%. So we in bear no we are in correction territory. This is the time right now where you invest all you can. This video is going to get you excited, get pumped. Let's go. Why you get pumped? It's because this is where you make money. This is the opportunity. This is the time where cash flow is being passed. Why? You got stocks, you got crypto, you got real estate. So this video is going to be talking about stocks and my dividend stock portfolio. But I just recently bought $300 or $350 worth of XRP. Then I'm going to probably buy $500 worth of Bitcoin. I just dropped $2,000 to $2,500 into the stock market. This is the time where you put your head down, you work your jobs, you get your overtime, you get your bonus checks, you get your commission checks, and you invest in yourself, invest into your business, invest into your dividend stock portfolio, invest into crypto, because 5 years down the line, it's 2025 now. You got Tesla, you got these companies laying people off, you got these companies that got these robots that are playing on taking our jobs. So this is the opportunity right now for you to invest while the market is down. Invest in yourself, and let's get this money. Watch you get this money. Get rich slowly by the magic of dividend compound with dividend growth stocks. Right here. Discover how dividend growth stocks can supercharge your portfolio and secure your financial wealth. Dividend growth stocks, dividend growth investing is one of the best ever. I've switched up my investment strategy to more of a I still do dividend growth investing, but more of a total return. But stocks like Visa and Lowe's and Lockheed Martin has low has a low percentage of what they pay out, and so they have a higher chance of increasing the dividend stocks in the long run. Dividend growth stocks sustain market-beating performance. The dividend growth rate essentially functions as a powerful value metric. I told you. So companies that grow their dividends typically demonstrate consistent earning growth, rising free cash flow, and conservative payout ratios. That's what I was thinking of. These companies have companies like MasterCard, Visa, Texas Roadhouse. What else? Thinking of my portfolio. Meta, Google, SPGI. These companies have high free cash flow and also have low payout ratio, meaning they have an ample amount of opportunity to increase their payouts. Lockheed Martin stands at 45%. Visa stands as a 21.5%. And as long as I've been invested for the past 8 years, it's been that 21% payout ratio. A low payout ratio ensures that dividends is sustainable over the long term, critical for building an income snowball. Gotta love a snowball. Most importantly, these rock solid fundamentals tend to translate to market beating performance over the long haul, meaning 10, 15, 20 plus years. It's not going to be over 1 or 2 years. You may get lucky, but even investing to the SP 500, if you're investing now and it's in the negative, zoom out 5 years. The more you, the longer you zoom out, 5, 10 years. I saw a graph one that says that uh, no one has lost money in SP 500 if they kept their money in SP 500 for 15 and plus years. Crazy, right? The longer you keep it in the SP 500, and as you get closer to 15 to 20 years, almost never, no one has ever lost any money, and that's us enduring hardships, atom bombs, and COVID-19 and Ebola wars. Still, people still would have made money if you zoom out 15 plus years. Crazy. This is the total return of someone of individuals if they just would invest into SP 500, Lowe's, Visa, and Lockheed Martin, keeping their money and just letting it grow. Quiet growth that won't rattle your nerves. While high flying tech stocks often grab headlines, thanks to these roller coaster price swings, top dividend growth stocks generally deliver market beating returns with remarkably low volatility. Visa, Lockheed Martin, and Lowe's. Also, dividend growth stocks, dividend growth investing is a passive income generator in retirement. This is key. This is key. When you adopt the dividend growth method and the dividend growth methodology, you are moving away from a methodology of having to accumulate shares, selling shares to live off of, rather than living off of the dividend income, or living off the dividend income that's growing from said stocks that you chose to live off of. Also, you don't even just have to be just one or two single stocks. It could be ETFs like DGRO, SCHD, Schwab dividend income ETF. You have Vanguard's high yield ETF, VYM. Right here it says, let's crunch the numbers real quick. If you contribute $7,000 to your Roth IRA for the max of just this year alone, or it's in this year 2024, and then for every year for 30 years, investing solely in top dividend growth stocks with an average yield of 2.11% and a 6% annualized dividend growth, you could generate an annual dividend income exceeding $16,000 per year. More impressively, your total account value will surpass $750,000. This example, however, is conservative. A more aggressive strategy targeting stocks with annualized dividend growth rates above 15%, which typically comes with lower yields under 1%, could potentially drive your annual dividend income to around $30,000 and result in a portfolio of nearly $1 million. Let's take this example a step further. Real quick, here is my dividend growth portfolio of 6,800. I have many low yielding. I want to go to the dividend view real quick, and then we're gonna go into the main meat of the potatoes of the portfolio of the money, right? How to make money. SCHD is my highest yielding dividend ETF or stock in my portfolio, and then as you go down, you have AFLAC, and then stocks lower than that. It's what they said right there. Those low yielding stocks that compound, that increase their dividend 15% plus. Broadcom, American Express, Microsoft increased their dividend roughly 10% every year. Visa increased their dividend roughly 15, 17, sometimes 20%. You have Meta. NVIDIA is just an income play. You have Aflac, which is a 2.14%, but increases typically around 10%. You got Kroger, typically increased their dividend around 10%. You have TSM, have recently increased their dividend around 10%. And then you have Broadcom, that typically has been increasing their dividend around 10 to 12%. Basically, what I'm trying to do is I'm trying to create that multi-million dollar portfolio uh, that Molly Fool just said, but then also to create a lot of income. So starting out at at 36 years old right now, plus 20 years, let's say 19 years, around 55 years old. This portfolio balance of my portfolio will be at $3.6 million, producing $10,000. Now you're gonna say, Cadero, that's not a lot of money. True, but how you make it a lot of money is this. This portfolio will be $3.6 million, right? That means that Nvidia, Meta, SCHG, VGT is gonna uh they're all gonna grow and compound at its different rates, but they're gonna grow. They said imagine this portfolio at $3.6 million. What you do is that you sell off some of these shares of these growth companies, and then you dump it into a higher yielding dividend income growth stock like ETF like SCHD, and then others as well to get that income while still keeping and maintaining that high dividend growth rate. So then, in this aspect, instead of this portfolio paying me $10,000, I can have this portfolio paying me 30, 40, 50. And if I want to plan on living outside the US and let's say Thailand, guess what? I only really need $40,000 per year to live. I need a portfolio of $40,000, and then I want it to grow above rate rate of return or inflation. If inflation increases 3%, I want a portfolio that's increasing at least 6 to 8%, so that it beats inflation, and then also my portfolio is growing, but also paying me 40,000. I can do that by me selling a lot of my low yielding stocks. By me selling a lot of my low yielding stocks, then and put that into XDTE, JEPQ, and SCHD, and then keeping Aflac, keeping Kroger, keeping uh, American Express, and keeping the visas and letting those compound along the way, and let SCHD compound and contributing $5,000 per year into SCHD and letting that grow, and then putting the rest of the money into XDTE and JEPQ. But also, if you sell some, guess what? You still live off some of the proceeds, right? So let's say I take $50,000 just to live off of, and then invest the rest of the money along the way, right? Just invest the rest of the proceeds, and then I'm living off that 50,000, and then my stocks is also going to be paying me dividend income along the way. That's going to be at long term capital gain rates. This is how you win. This is how you plan on living off your portfolio, dividend growth investing, that thought process, that mindset. Don't let times like right now where the tariffs and everything go down, everything is in the red as you see. I'm down over $10,000. I'm still investing. I'm still doing $2,000 per month, $1,500 per month, $1,000 per month. All the money I can get, money from my YouTube channel, money from my bonus, money for commissions. Whenever I can, I'm throwing that like the whole kitchen sink and portfolio to get it at $100,000 so that it can be compounded a lot faster. Because once you hit the 100,000, 200,000, if you include inflation in 2025 terms of Buffett and Charlie Munger, your portfolios will compound a lot quicker. So that's why I'm investing 200. I'm investing $2,000 per month because I'm really trying to get that compounding going. So make sure you like and subscribe to my channel. Rock with your boy. I'm hungry. I'm about to eat my burrito. I'm back, baby. Peace.